Hmm. Yeah. All right. I see many of us are here already. So now this is pretty much the new normal. This is what we'll be doing, except there will be two other times later in the semester where we'll be in person. For whatever reason, the school asked us to do it this way. I'm not sure if that means in the future they'll be doing it this way, but for now, we can do this out of the comfort of your own home. And so when we're done, this whole thing will be posted on YouTube. I actually have a YouTube channel here. And so even though it probably could be stored on Brightspace, I just find that it's maybe a little easier to put it on YouTube just because I know that I have plenty of memory there. Whereas, some of my other online storage systems, like Brightspace or Blackboard or whatever, sometimes there isn't enough room. So um, this little A means it's my account. So my official name, I don't remember where they showed this, but if you are to go and look for it, I think you'll find it because it's always just right there when I sign up for it. Um, oh my God. Maybe not. I could have sworn it was Dr. ACA, but let me try that again. So I think the problem is when I ask for YouTube, it just automatically goes into my account, and I'm not sure if I can stop that. But you'd think there'd be somewhere in here that it lists my official screen name. Oh, here it is, maybe. Oh, I was right, Dr. ACA. All right. So in other words, any computer other than this one, I guess, as soon as you type that in, you'll find my account. And then what I'll be doing is setting up a special playlist, as it's called. And it's not set up yet because we don't have any videos for it. As soon as the first video is ready, then you can set up a playlist. And so let me just show you that there's several others here already. You can see that this is something I did in the fall. And so the title will be right here, and then the date, or it'll say spring 2025. So they'll all be sitting right here in case you want to go back and watch them, which is especially important if somebody gets home late from work or if they can't be here, whatever the case may be. So anyway, we're going to jump ahead to chapter 3 in our book. And oh, that's one more thing. Let me go look and remind myself about the mind tap. I've forgotten when the first assignment is due. I think it may have already been due. So let me just confirm that. Okay. Uh, there we go. Oh, no, I guess not. All right. Oh, wait. What's going on here? Sometimes, these weeks, I don't know where they get these numbers from. Um, so it looks like the first assignment is not actually due until this coming Sunday night. So try not to forget about it because, it's like we haven't done any of these yet. But it looks like now since we only have 60, and so I'm not sure how long this is, but it looks like there's 7 questions, but they tend to have multiple parts, so it can take a while to get this done. And these are based on chapter 1. Remember, I asked everyone to sort of read through chapter 1, just because it's a lot of just basic definitions, and I thought it'd make more sense for us to move on to something a little bit more advanced. So if you're not sure of the answers, you can go back to the slides for chapter 1, or the book is over here somewhere. Let's see. Oh, here it is on the side. You can see with all these icons over here. The full book is right here. And anything you need, you can go to chapter 1. And also one more thing, you're supposed to be allowed 3 attempts. In fact, it actually says it right here, which is kind of nice. Keep the highest. So if you don't do as well as you were hoping, you should be given the opportunity to try each one 3 times, and then it'll keep the best. So there's no risk to doing it more than once. Okay. All right. So I think that's all the housekeeping that we need to do. We can now go back and start with our chapter 3. So what I've done here is I've written some of my own notes, and we're also going to use some of the notes that came with the book. I think that sometimes their notes are okay, but I'd like to add my own to it just because I think there's so much more interesting material that we could be going over. And sometimes they have a tendency to gloss over certain things. So one thing we could do is take a quick look at today's results in the currency markets. And one of the quickest ways to get that is with Bloomberg currencies. And so this is actually completely free, or at least it still is. And if you look through here, you'll see some of the major currency pairs, although certainly not all of them. And now we have to be careful in the way we interpret these. Like, for example, USD JPY, you would think this represents the number of dollars per yen, but in fact, it's the other way around. This tells me how many yen it takes to buy 1 US dollar. I don't know why they do it this way, but that's the standard convention. So at the moment, if I wanted to buy a single US dollar in Japan, I'd have to pay 155.62 yen, right? And then similarly over here, it's the other way around. It's now dollars per pound, about $1.24. US Canadian, it's up around 144. The US dollar and the Canadian dollar, over the years, the US dollar is always stronger than the Canadian dollars, but some years the differential is more noticeable. Okay. So that means, since it's so high, that means this might be a good time to take a little vacation in Canada because you'll get a lot for your money. And then some of these are do not involve the dollar at all. These are the cross exchange rates. This tells me how many pounds it would take to buy a single euro, for example. And then here's an interesting case, which we'll discuss in detail later on. Hong Kong dollars per US dollar. It's approximately 7.79. The reason why this one is interesting is because the Central Bank of Hong Kong has a policy of keeping this exchange rate fixed at this level, and it does not allow it to fluctuate in the foreign exchange markets. Okay, so we're going to learn later on how this is done and why. Okay, it's kind of unusual in this day and age to find an exchange rate that's fixed like this, but it wasn't that long ago that many currencies throughout the world were fixed. Okay, having a fixed exchange rate has a lot of important advantages, but some very big drawbacks. All right, and so anyway, now the other interesting thing about foreign exchange is that you never know what's going to affect currency values. So, if you're really interested in this area, what you may want to do is get into the habit of looking at the financial news every day. Now, one of my favorites for doing this is, let's say, yeah, my computer is very slow today for some reason. Hold on. Yeah, look at this. All right, we'll just have to use this one again. If you go to, let's say, CNBC.com. So right now, what's going on in these markets? Sometimes a website like this will also have articles about currencies if something is directly relevant happening in those. All right, it's being horribly slow right now. Normally, it would across the top, you would see all of this major stock market indices like the Standard & Poor's 500, the Dow Jones, and you would see how the overall market is doing. Yesterday, you might recall the markets got hammered by the release of a brand new artificial intelligence software from some company in China. And that was seen as a direct threat to American companies like NVIDIA. Here, it doesn't seem to want to show us anything. So we'll come back to this later. And so we'll start here. And so we're going to start by basically introducing the foreign exchange markets. And we'll note here, surprisingly enough, these do not trade on exchanges like stocks and bonds do. Instead, they trade directly between dealers, as they're called, foreign exchange dealers, who primarily are commercial or investment banks. Okay. And now here's the shocking thing. You might find this really surprising. Every single day, more than $7 trillion worth of currencies are traded between dealers. Now that raises an interesting question. Why? What is going on with these currencies? Why are they being traded so often? Well, one answer is that much of this is used to finance international trade. Okay, but it turns out that's only a fairly small percentage of the total. What else can you do with a foreign currency? In other words, why would people be buying and selling them like this? Well, the primary motives for holding currencies, let me sneak this in here. So the main reasons one, to buy foreign goods and services, first. But then to invest in foreign financial assets, such as stocks and bonds, or to hold foreign currencies in foreign bank accounts that pay the local rate of interest. In other words, imagine I'm a multinational corporation and I do a lot of business in England. So I might decide, I don't want to be constantly dealing with foreign exchange risk. So why don't I just keep some of my funds denominated in British pounds in a British bank account, because I may need to pay bills with British pounds. So I might buy British pounds and keep them in a British bank account just because I may need them to run my business. Now, there's a fourth reason for doing this too. Well, actually, I shouldn't say that. There's multiple reasons. Another possibility is to speculate about the future direction of foreign currencies. So let me show you an example of what I mean. Let's say, for example, today, let's say exchange rate between the dollar and the pound is, let's say, $1.25 per pound. By the way, I don't know if you're aware of it or not, but you can actually get this British pound symbol in here it is, in either Word or PowerPoint. And now let's just say that you're a speculator. You're not really in the business. You don't do business in England. An investor who thinks that this will rise to, let's say, $1.30 per pound in a month, can buy pounds today and hopefully sell them at a profit in the future. So I may just be gambling. I'm saying, listen, I'm pretty sure that the exchange rate is going to go up. So just like any other asset you buy, because you're hoping that the price goes up, you buy it now, you hang on to it. Possibly you deposit it in a British bank account and earn some interest. And when the time is right, you sell it and you're hoping that the price will go up. Okay. So there's a lot of that as well. So it's not just for buying goods and services. It's not just for investing in foreign financial assets. It also enables us to speculate on the future direction of currencies. All right. So, professional foreign exchange traders would be the ones who get involved in this business mostly. They've been given an account, and they're trading the bank's money, and they're hoping to make profits because they believe they have some expertise in the foreign exchange markets. In other words, they can anticipate what might happen to these currencies based on what's happening in world markets. Now, just like any other speculation, it could go horribly wrong, but this is one reason why you might buy a foreign currency in order to take advantage of changes in exchange rates. Okay, so all of that adds up to a lot of demand. Now, keep in mind, this is throughout the entire world. Unlike stock markets, which have very specific opening and closing times, the foreign exchange markets basically never sleep. They're open 24/7. Somewhere in the world at any given time, currencies are being traded. All right. So it's a universal, I mean, it's a worldwide market, let's say. All right. Now, if you go back to January 20th, these are some exchange rates that I chose off of the internet just to illustrate. And you can see the prices today are not much different than these. This is the price of buying a British pound in dollars. This is the price of buying dollars with yen. And this is the cost of buying euros with dollars. Okay. Now, there's a lot of sources for foreign exchange data. The one I showed you is Bloomberg.com. Also, the Wall Street Journal has a currency page. Let's see if we can go open it up. All right, let's see what we got. All right, so they actually have a very comprehensive list of exchange rates. And like here, you can see these are the major ones. But yeah, here we go. By the way, you may not see this if you go to this website because I have a subscription to the online Wall Street Journal. I don't know if you have to have that to see these numbers, but what they're doing here is showing it over the last 2 days. One other thing I'd like to show you too is that they're actually quoting these numbers in two equivalent ways. Uh-oh. Oh.